Up winners and losers with our financial expert, Rob Black, this morning. Rob, good morning to you. Those stocks, they're doing some gymnastics, huh?
Yeah, they are. I thought I was going to come on about an hour ago, and stocks were down 600, and then they recovered on the Dow. So it's pretty volatile, and that probably means we're getting closer to knowing what the end's going to look like. Oil up 8% today to 108. Longer oil stays high, the less the consumer has to spend because we're spending on gasoline. The slower the economy gets, more likelihood of a recession. So this should end in the next 2 weeks because the president, he wants to get the Republicans reelected come fall. So I would imagine it wraps up, but Iran obviously has something to say about that too.
Definitely. And, you know, talking about what is happening here at home and how voters are going to feel when it comes to the midterms. I mean, currently, the cost of this war is pretty damaging to a lot of Americans.
Yeah, I thought I'd, take us down that road. It's no longer just a Middle East headline story. It's now a domestic financial burden. I call it, the first thing, the Hormuz gas tax, $4.02 nationwide, $5.89 for a gallon in California. Commutes, they're starting to hurt. Then the second one would be the grocery emergency that's going to happen. Cost of fertilizer goes higher because fertilizer uses a lot of natural gas. Iran hit a natural gas facility in Kuwait that's going to take 3 to 5 years to get back up and going. So that's going to push fertilizer costs higher, which is going to put food costs higher. Then you get freight, the trucks, things that are delivered to stores. Diesel is at $5.45, so retailers will pay more. They'll probably pass it on to you and me. Then you get the shipping. Now, a lot of things that we ship from Asia to the United States, that's the one that hurts because that fuel's up 233%. That's brutal.
Yeah.
But then you get the jet fuel, so we want to go on vacation, get away from it all. That's not going to help because jet fuel's up 82%. Domestic airlines are getting their ratings cut today, and they're lowering their expectations and cutting, hundreds of millions of dollars out of profits. Then you get the NASDAQ that doesn't like uncertainty. That's down 10%. So if you're wealthy and you can afford more gas and more food and you can afford all that, you're still feeling the hit on your bank account, so to speak, your investments. And then the federal budget deficit, instead of improving our roads and our airports, $200 billion is going to go to fighting this war at minimum. So it's getting out of hand.
Well, it's getting out of hand, and it's draining a lot of people. People want an escape, and there's some entertainment that's come on the scene this week that's allowing for a little bit of that, right?
Absolutely. Super Mario Galaxy is going to open this weekend. Worldwide, it's expected to pull in $350 million, the biggest opening of the year. I guess you would say that it's 2 hours of popcorn and darkness and entertainment, which is a break from, Republican Democrats and war and all the stuff that's going on in the real world. So that's going to be a big movie, and movie theaters could use it. So I will definitely be seeing a movie this weekend just to get a break from all this reporting.
I was going to say, I don't think you'll be alone. It'll probably be one of those where you really have to fight for the right seat that you want at the movie theaters this weekend. Speaking of seats, a lot of people want to know whether or not we're ever going to be able to get a seat on a rocket into space tourism. The question is, will it actually take off anytime soon?
Yeah, well, there's a couple companies that do it. One of them is called Virgin Galactic, and they took a 2-year break from it, but they just started opening up the line again, so to speak, for reservations. But this time, instead of costing $450,000 to go up into space for just a few minutes, it's now going to cost you $750,000 per seat. I don't know. Is feeling weightlessness all that important? So not for me.
Well, there's so many of those experiences you can do right down here on Earth where you can get into one of those chambers and they give you the weightless experience, and some people really enjoy that. So I don't know that it's $750,000 worth, but I mean, those who have gone up keep saying just the beautiful view. It's something that you can't really experience any other way. So I guess some people who have the money to do so. Not a lot of people have the money to do so, though. Millennials specifically, we barely have money to buy ourselves a home. That's your other loser here is real estate.
And I'm sorry for doing so many losers when I'm on with you. California Dreaming About Mamas and Papa's Houses is the new song from my head. Roughly 18% of houses in California are hand-me-downs. So the transfer fees go from parents to kids. California also has longer tenants because of multiple reasons. The California homeowner tends to stay in for about 20 years on average. So I call it till death do us sell or death do us part. 1978's Prop 13 keeps property taxes tethered to the original price. I don't think that helps. Young people like yourself get into a new home. The elderly are locked in because with mortgage rates going from 3% to 7%, they can't downsize and get into a condo because the condo cost would be more than their home cost. So, and then there's that wealth gap of I have a home and you rent a home, and for you to get a home, you have to save money for a deposit, and that means you're not saving money into your 401k and your retirement plan. So it's bad all over. California is a mess when it comes to real estate prices.
It really is hard and discouraging to see. I do, one of these days, we're going to get me with winner, winner, winner all morning.
I will.
Well,
I
lately
promise.
it's been the triple L's. Rob, we really appreciate you always. This is all his information there at the bottom of your screen if you want to follow him, ask him some questions. Thank you, Rob.